This is interesting. It's like you said, it's inevitable. It's going to be coming. So it's interesting to see where you think it's going to impact first. And I know that's the section coming up. So we'll let you jump into it.
Awesome. Thanks for that. No, and really sort of the whole conversation as to where it's going to impact first is really the big unknown right now, right? Because we're still in the first inning of this whole blockchain conversation. But there are some common areas that I know I've seen quite a bit for payables and receivables in terms of confirmations, or for entrepreneurs, or for any size business, right? There's always that pain point in basically ensuring that on the payable side and on the AR side that everything is actually accurate. And for bigger companies, those intercompany transfers, I mean, can be a big hassle for some of those larger companies out there who operate all over the world, or even have different operating lines in different parts of the country. Those intracompany accounts and items can be a real headache because not everyone has the same level of information at the same time. And then there's also the whole idea of a contract, right? Because every time that there's a contract, there's always a time delay in terms of the obligations, of the terms, of the payments, of who is actually responsible for what at what time. And all of that misinterpretation and also focus on payment terms and everything else can eat up a lot of time and not add too much value into the business process itself. So, from a strictly accounting point of view, what are account reconciliations, whether it's a bank rec, whether it's a rec as a part of an audit or a confirmation? All that we're basically doing, and it's a big chunk of the work that industry and accountants working in public practice or in auditing do. But if you actually take a step back and analyze what exactly a bank rec is or a account rec is a comparison of some balances inside the company versus a trusted third party or some external third party like a bank or a joint venture partner or the third party balances. Or it can be a bank rec, it can be a equity investment stake that we have in some other company, or it can be a comparison of the balances that we have on our books versus the balance of that exact same item on the books of our partner, if we're doing a joint venture or we're operating as a consortium on a project. And so now we have some examples as to how this might change going forward. And so here I have a nice basic example of how a bank rec right now basically works. And again, the whole function of a bank rec is to analyze the bank statement balance and the cash balance and to see if there is a difference, one, and if there's a difference, how much that difference actually is. And is there a good reason as to why we have that difference? But going forward, if this information is put onto the blockchain, right, and there's a private blockchain set up, and that private blockchain has the bank, has the auditor, and has our customers, it's a lot easier to actually share information, right? So on the left-hand side is the current state, right? Everybody has their own records, and there is no sharing of information because everyone has that on their own internal system. On the right-hand side, if that data is put onto the blockchain, and the audit firm is there, and the bank is there, and some client firms are there, everybody has access to that same updated copy of that information as it's actually updated. And so a big chunk of those bank recs or account recs or confirmations are not going to be needed anymore because everybody has that data, has the same record, has the same copy, has the same valuation of information on their books at the same time. So it's a real potential game changer for the audit function at first. So if there aren't any more recs, and if the bank of your client and you and your client are all part of that blockchain, is there really a need ultimately to do any bank recs or do any account recs? And the short answer is over time, there really isn't going to be. Now, again, this is not going to happen overnight or in 2 years, but in 5 or 10 years, I would say really a good chunk of this work is not going to be happening anymore. Or if it's happening, it's almost going to be a review of the automated bank rec versus the actual investing of personnel and of billable hours on items like bank recs. And that's because if all this information is available in real time, then any issues that are popping up or any differences that are popping up can be flagged and identified and resolved as they happen, versus having to wait to the end of the quarter or the interim work or the annual audit itself. And I think, as we all know, I have not met a person that actually likes doing bank recs. Now, I'm sure there are some people out there, but I haven't met them. So if we're able to augment or automate some of this other work, we are able to focus instead on those higher level tasks, right, that all of us want to do anyway, to transition to become that higher level business partner that all of us want to be. So, and here's just a quick little example of how blockchain could impact the audit process, and already is, because it all comes down to why are audits necessary in the first place. And so, as part of the audit, there are some core characteristics and core traits that we're trying to verify. The existence, the valuation, the completeness, accuracy, and the consistency of how data is being analyzed and presented, both internally and externally. But if all of us are actually sharing that information on a continuous basis, and all of us are verifying that information and have access to this information and see that it's a permanent record, then the audit process itself is going to really change quite a bit, because the whole current idea of how audits function and why audits are needed is because people don't have access to all the same information. And if they do, and if they are going to, that's going to have a tremendous impact on how audit actually works. In terms of confirmations, inventory counts, AR recs, everything else. And again, the idea of a blockchain-enabled audit, if you actually have that private network actually set up between you and your clients and yourself, everybody has access to their information, and all of the transactions that are going on between them and their suppliers in turn are readily available in real time. Data is then verified and approved at that network level as it's uploaded. And again, it's important to just keep in mind that basically the whole idea of a blockchain network or a blockchain itself is it's a network of computers, right? There is no magic sauce in here. It's a network of computers. But it has some extra functionality that is different than other network options out there. And as this data is already verified and encrypted and a permanent record of sorts, right? Each block is a permanent record. It can really have a dramatic change on audit. So as this becomes more and more commonplace, we can actually take a look at how it's already changing the audit process. And over here on the right-hand side, there's a graphic, because as the information flows continuously between different parties on the blockchain, and that information flows in real time as it's happening, then auditors are going to be able to automatically confirm things like payment terms, AR balances, payable confirmations, and inventory counts and valuation, because that information is updated and publicly available to anybody who's on the blockchain that has access to that information as it actually happens. So some key takeaways as to how it might change audit is that confirmations really aren't going to be needed anymore, either for AR balances or valuation or AP confirmation, because again, if those counterparties are part of that private blockchain, then all that data is available to them anyway. So throughout the year, as it happens, they have the ability to go in and to make changes or to point stuff out if necessary. we are going to be able to really perform more comprehensive audits, again, because as the data is uploaded and stored and forms that permanent block, we are going to be able to go through those blocks and to see if there are any changes that then are made. We are going to be able to pull those out pretty easily and see what's going on, who is trying to change it, and what are they trying to actually change it to. And then sort of going forward, because here's where blockchain is really exciting, is that it's not an accounting tool at all. That any type of information can be stored on a blockchain, and already is. Shipping information, healthcare data, contractual information, food safety data, land record and ownership information, any of that data can be stored on a blockchain. And as that becomes more and more common, auditors and audit firms and other attestation individuals are going to be able to expand the scope of services that they offer. As opposed to being automated out of a job, actually this increased automation and this permanent record of information is going to enable auditors to offer more services going forward. And just one more quick thing to keep in mind though, all of this is going to help us focus on higher level work, save time for ourselves, and save money for our clients, and focus ourselves more on that higher level work, on that advisory work that our clients get more value out of versus a audit or a tax return being prepped. So the whole conversation thread should be focused on how can we harness these tools and these trends to enable us to actually deliver more value or higher level value or higher margin value going forward. And then obviously most of the current implementation is happening at the big firm levels. The accounting firms, again, all of the big four have blockchain labs and teams currently underway. And again, have even partnered to develop a common blockchain audit platform for a group of Taiwanese banks. So it's going to be very interesting to see how that plays out, right? Whether each of the big four is going to build out their own in-house blockchain option, or if the four of them actually cooperate to develop a template or a framework for how to audit blockchains, or how to develop a blockchain for accounting or for audit. So it's going to be very interesting to see how all of that plays out. And now a pivot to the tax conversation. There are a lot of pain points in tax, right? And you could have a whole conversation on all these pain points, but there's a lag of information. There are phase-in and phase-outs in the Tax Cuts and Jobs Act that passed at the end of 2017. There are IRS funding issues, right? So even if you want to have a conversation, you aren't always able to get through. But blockchain has the ability to change and to streamline and to augment this process through the increased transparency and availability of information. But it is going to take time. And more importantly, there is no definitive guidance from the IRS as to how to use blockchain for tax reporting purposes as of yet. And I'm sure that all of that is an ongoing conversation, both at the IRS and at the FASB and at the AICPA. But as of right now, there is no definitive guidance as to how to use blockchain data for tax reporting. And so blockchain and taxes, so since the blockchain can enable the real-time verification and confirmation of that information for withholding purposes and for actually what's actually going on with different organizations and individuals, if that data is available in a transparent and a continuously updated format, that's also going to help cut down on the instances of fraud and aggravation, and in turn enable the IRS to allocate resources to actual questions and customer service, including possibly answering you on the phone, right? So as this increased transparency becomes more and more common, it really is going to become more and more possible to have these taxes almost being filed on a continuous basis. So again, all of this is still a emerging area, and it is not being used currently too much here in the US, but I can definitely see how it is going to have a impact